Two empires just held hands in public, and the markets noticed before the politicians did. Russia and Iran, the two most sanctioned, most financially isolated, most aggressively targeted nations in the entire American-led financial order, just conducted joint military drills in a theater that covers the Persian Gulf, the Caspian Sea, and the northwestern Indian Ocean simultaneously. Not a diplomatic meeting, not a trade agreement, not a carefully worded joint statement designed to signal alignment while maintaining deniability. Live military exercises, combined naval operations, shared missile defense protocols, integrated command and control procedures that only get practiced when two militaries are genuinely preparing to fight together, rather than merely performing political theater for domestic audiences. The markets responded before the press conferences finished. Equities sold off. Oil spiked. Gold surged past levels that analysts had been calling resistance ceilings for months. The Swiss franc strengthened against the dollar in the absence of any Swiss domestic catalyst. U.S. Treasury yields moved in the pattern that bond traders recognize as genuine geopolitical fear rather than routine volatility. These are not random market movements. These are the simultaneous, coordinated responses of the most sophisticated financial institutions on Earth to a single unified signal that the alliance capable of closing the Strait of Hormuz, disrupting European energy supply, and challenging dollar-denominated oil settlement just demonstrated operational military coherence for the first time in modern history. Here is why this specific moment is different from every previous Russia-Iran diplomatic alignment announcement. Previous alignments were financial and political. Agreements to trade in non-dollar currencies, cooperation frameworks within BRICS and the Shanghai Cooperation Organization, bilateral energy deals denominated in rubles and rials. All of it significant, none of it operationally military. What just happened is operationally military, and the gap between financial alignment and military alignment is the gap between a threat and a capability, between a warning and a weapon, between something that makes Washington uncomfortable and something that makes Washington genuinely afraid. The safe havens are rallying because the smart money just recognized that the world's most critical energy choke point is now covered by a combined military force that neither America nor NATO has a clear operational plan to defeat simultaneously, and that recognition, that specific, terrifying, financially consequential recognition, is the dark truth that this market move is expressing in the only language that never lies: price. Let's establish exactly what these joint drills involved, because the operational details are where the financial implications live. The exercises covered three distinct operational theaters simultaneously, a coordination complexity that signals genuine military integration rather than symbolic cooperation. In the Persian Gulf theater, Russian and Iranian naval units practiced combined anti-ship missile operations and mine-laying procedures in the approaches to the Strait of Hormuz. In the Caspian Sea theater, they rehearsed rapid logistics transfer protocols, the movement of Russian precision munitions and electronic warfare systems to Iranian territory through the Caspian corridor that bypasses every Western sanctions enforcement mechanism. And in the northwestern Indian Ocean, they conducted combined submarine operations that directly threaten the undersea communications cables and energy pipeline infrastructure that connects Gulf energy supply to Asian demand. Each theater has a specific financial target. The Hormuz operations threaten the 21 million barrels of daily oil flow that prices global energy. The Caspian logistics rehearsal operationalizes the weapons transfer pipeline that upgrades Iranian strike capability faster than American sanctions can degrade it. And the Indian Ocean submarine exercises threaten the physical infrastructure of the alternative energy supply routes that Europe built after cutting Russian pipeline gas in 2022. 3 theaters, 3 financial targets, 1 coordinated military exercise that covers all of them simultaneously. Now examine the specific capabilities Russia brought to these drills, because the Russian contribution is what transforms Iranian military power from regionally significant to globally threatening. Russia's Kilo-class submarines, designated by NATO as the Black Hole submarine for its extraordinary acoustic stealth characteristics, operating in conjunction with Iranian Kilo-class boats that Russia sold to Tehran in the 1990s, create a combined underwater threat that American and NATO anti-submarine warfare assets in the region are not currently resourced to counter simultaneously. Russia's Kar-35 anti-ship cruise missiles, which Russia has been quietly transferring to Iran through the Caspian logistics route, extend Iranian naval strike range from approximately 300 kilometers to over 600 kilometers, covering the entire Persian Gulf, the Gulf of Oman, and significant portions of the Arabian Sea from Iranian coastal launch positions. But the most financially consequential Russian contribution to this military alliance is not hardware. It is electronic warfare capability. Russia's Krasuka-4 electronic warfare system, which has demonstrated in Ukraine the ability to suppress GPS guidance, disrupt data link communications between American munitions and their targeting systems, and degrade the Aegis radar systems on American destroyers, changes the fundamental equation of American power projection in the Gulf. Every Tomahawk cruise missile in America's strike inventory relies on GPS terminal guidance. Every carrier-based strike aircraft relies on data link connectivity for targeting precision. Every Patriot PAC-3 interceptor relies on radar fidelity for terminal guidance. Russian electronic warfare systems operating from Iranian territory can degrade all three simultaneously, and degraded American precision strike capability over Iranian territory means the cost of military response to Iranian escalation just increased by a factor that no Pentagon budget document has publicly acknowledged. The Strait of Hormuz processed $1.2 trillion in energy trade in 2024, 21 million barrels of oil per day, 77 million tons of LNG. The entire post-Russia European energy architecture runs through this channel. The entire East Asian industrial base, Japan, South Korea, Taiwan, the manufacturing economies that produce the technology the Western financial system depends on, runs on energy that transits this channel. A combined Russia-Iran military force conducting live exercises in the approaches to this channel is not a geopolitical abstraction. It is a $1.2 trillion annual financial vulnerability being covered by a loaded gun that just demonstrated it can actually fire. The formation of military alliances between financially isolated powers challenging a dominant empire's resource control architecture is not a new pattern. It is one of the oldest and most reliably predictive patterns in the entire history of power transitions. And the financial consequences of ignoring it, of treating military alliance formation as a diplomatic problem rather than a financial catastrophe signal, have been catastrophic every single time. Study 1936. Germany and Italy signed the Rome-Berlin Axis. Japan joins with the Anti-Comintern Pact. Three nations all under various forms of economic pressure from the Western liberal order, all facing financial isolation or trade discrimination, pursuing resource access strategies that the dominant powers were actively trying to block, formalize a military alliance that collectively controls significant portions of European industrial capacity, Mediterranean sea lanes, and Pacific resource access routes. The Western financial establishment's response was a combination of denial, appeasement, and continued business as usual. British banks continued financing German industrial bonds. American oil companies continued supplying Japanese military fuel requirements. The financial system kept treating the military alliance as a political problem, while the military alliance was transforming itself into a capability that would eventually cost the Western alliance $4.1 trillion in 2024 dollars to defeat. The pattern is not that the alliance itself was unstoppable. The pattern is that the financial system's failure to price the alliance's formation accurately, its insistence on treating military alignment as geopolitical noise rather than financial signal, meant that the resources needed to deter the alliance were not mobilized until deterrence was no longer possible. And the cost of fighting a war that deterrence failed to prevent was orders of magnitude larger than the cost of the deterrence that was never funded. Russia and Iran's joint military drills are 2025's version of that 1936 signal, and the markets that sold off today are the only institutional actors currently pricing it correctly. Now trace the hidden financial architecture that made this alliance not just possible but inevitable. Russia and Iran share one fundamental strategic condition that overrides every historical, cultural, and religious difference between them. Both nations are outside the dollar-based financial system in ways that cannot be reversed through negotiation or policy change. Russia's $300 billion in sovereign reserves were frozen by Western sanctions following the 2022 Ukraine invasion, the single largest sovereign asset seizure in financial history. Iran has been excluded from SWIFT since 2012. Both nations have watched the dollar weaponized against them with a specificity and severity that has eliminated any remaining institutional belief that reintegration into the dollar system is either possible or desirable. This shared condition creates a financial incentive for military alliance that is stronger than any diplomatic agreement, any ideological alignment, or any personal relationship between leadership. When two nations are both outside the system that the dominant empire uses to enforce its strategic preferences, they have a common interest in building an alternative to that system that is powerful enough to resist enforcement. The military drills are not the alliance. They are the physical expression of a financial logic that has been operating for years and has now reached the stage where it requires military operationalization to become strategically credible. The combined Russian-Iranian energy position, Russia's 10 million barrel per day oil production, and 700 billion cubic meters of annual natural gas output, combined with Iran's 3.5 million barrel per day production capacity, and the world's second largest natural gas reserves, represents approximately 25% of global hydrocarbon supply, an alliance that controls 25% of global hydrocarbon supply, that sits astride the primary transit route for another 21% of daily global oil flow, and that has now demonstrated operational military integration, controls the energy price lever for 46% of the world's daily oil consumption. That is not a geopolitical challenge to American dominance. That is a structural financial threat to the petrodollar architecture that has underwritten American economic hegemony since 1974. The British East India Company faced a structurally identical threat in the early 18th century when French and Dutch trading companies began coordinating their activities in the Indian Ocean trade. routes that the East India Company had treated as a private financial domain. The initial British response was commercial, trying to outcompete the French and Dutch through better logistics and lower prices. When that failed, it escalated to naval skirmishing. When that escalated to full naval warfare, the financial cost to the East India Company, and through it, to the British Crown that depended on company revenues, was so large that it contributed directly to the fiscal crisis that triggered the American Colonial Rebellion. The attempt to defend a financial monopoly through military force against a coordinated alliance of challengers generated costs that destroyed the monopoly more completely than the challengers ever could have achieved through competition alone. America is structurally replicating that exact dynamic. The sanctions regime that was supposed to financially isolate Russia and Iran has instead financially unified them. The military pressure that was supposed to constrain their regional influence has instead incentivized exactly the military alliance coordination that today's joint drills represent. And the cost of responding militarily to the alliance, those policies created, will be borne by a financial system already running a $2 trillion annual deficit and carrying $34 trillion in accumulated debt. The empire's defensive response is being funded by borrowing from the same global capital markets that Russia and Iran's alternative financial architecture is quietly, steadily, irreversibly pulling volume away from. Watch 3 developments in the next 30 days that will determine whether today's market sell-off was a temporary volatility event or the opening movement of a sustained financial restructuring changes the global investment landscape for a generation. First, watch Chinese naval positioning in the Indian Ocean. If People's Liberation Army Navy vessels begin conducting exercises in proximity to the Russian-Iranian joint drill zones, even under the cover of routine patrols or previously scheduled exercises, the alliance has expanded from bilateral to trilateral. A Russia-Iran-China military alignment covering the Persian Gulf, the Indian Ocean, and the South China Sea simultaneously is not a regional challenge to American power. It is a global one. And the financial repricing of that reality would make today's sell-off look like a rounding error. Second, watch Saudi Arabia's sovereign wealth fund, the Public Investment Fund, for any unusual reallocation signals. Saudi Arabia is the linchpin of the petrodollar architecture. If the PIF begins accelerating its shift toward non-dollar-denominated assets, Chinese equities, gold, real estate in non-Western markets, it signals that Riyadh has privately concluded that the Russia-Iran military alliance has permanently altered the security calculation that underpins the petrodollar agreement. Saudi Arabia does not need to publicly abandon the petrodollar to destroy it. It just needs to quietly reduce its commitment to it, while the alliance that threatens it grows stronger. Watch the PF allocation reports. They will tell you what Riyadh believes before Riyadh says anything publicly. Third, watch the gold-to-oil ratio. Historically, this ratio has been the most sensitive real-time indicator of the market's assessment of Persian Gulf stability. When the ratio rises, when gold appreciates faster than oil, it signals that institutional money is pricing geopolitical risk premium into hard assets faster than it is pricing supply, disruption into energy. When both gold and oil rise simultaneously, as they are doing right now, it signals that the market is pricing both the supply disruption risk and the financial system stress risk simultaneously. That simultaneous pricing is rare. It has occurred in only 4 periods in the past 50 years, all of them preceding major geopolitical restructuring events that permanently altered the global financial landscape. Here is the final truth that every empire that has ever faced a coordinated challenger alliance has eventually been forced to confront. The alliance is never as weak as it looks at the beginning. The dominant power's advantages, financial depth, technological superiority, institutional credibility, are never as durable as they appear from inside the institutions that possess them. And the moment that the Challenger Alliance achieves operational military coherence, the moment it transitions from financial and political alignment to actual demonstrated military integration, the window for deterrence closes faster than any institutional response process can operate. Russia and Iran just crossed that threshold today. The market sold off because the algorithms and the analysts and the institutional risk managers who process these signals for a living recognized the crossing in real time. The safe havens rallied because the money that understands history knows what comes after this moment in every previous instance where it has occurred. The question is not whether the current financial order can survive a fully operational Russia-Iran military alliance covering the world's most critical energy choke point. The question is how long the institutions that depend on that order can maintain the pretense that what just happened in those joint drills is manageable within the existing framework. Because the pretense has a cost, and the cost compounds every day the pretense is maintained instead of the reality being priced. The markets already know. The question is whether you do.